What is going on, everybody? Welcome back to the channel. I am your host, and today is April 14th, 2026. The market is absolutely on fire today, and we have got 5 stocks that are screaming for your attention right now. We are talking about a 12.5% rocket in Oracle, a major bounce in Adobe, a PayPal technical breakout, and some serious action in the EV and Fintech space. I have got my charts pulled up, the numbers are live, and we are going to break down every single one of these with real technical analysis, real price targets, and real talk. No fluff, no filler. Let's get straight into it. Stock number 1 is going to blow your mind. Alright, let's kick things off with the biggest mover of the day and honestly one of the biggest single-day moves we have seen from a megacap tech company in quite some time. Oracle Corporation, ticker Oracle, is up a staggering 12.69% today, trading at $155.62. Now, before we get into the technicals, let's talk about what is driving this, because a move like this does not happen in a vacuum. Oracle has been aggressively expanding its cloud infrastructure business, and today's catalyst appears tied to a major contract announcement or earnings-related guidance that has completely reset the market's view of this company's near-term growth trajectory. When you see a large cap like Oracle, with a market cap of $447 billion, move 13% in a single session, institutions are repositioning in a big way. And the volume confirms it. Today's volume is 49.5 million shares versus an average daily volume of about 29.4 million. That is a volume ratio of 1.68, meaning 68% above normal. This is not retail momentum. This is smart money moving in with conviction. Now let's get into the chart. Oracle is currently trading at 155.62, which is sitting right at its 200-day simple moving average of 155.62 as well. That is not a coincidence. The stock reclaimed its 20-day SMA at 146.57 and its 50-day SMA at 149.87 in one single candle today. That is called a moving average stack reclaim, and it is extremely bullish from a technical standpoint. The RSI is sitting at 51.7. Now you might look at that and think it is not overbought, and you would be right. For a 13% move, an RSI of 52 is actually telling you there is room to run. The stock was oversold going into today, and this bounce still has not pushed RSI into overheated territory above 70. That is constructive. Here is the key context though. ORCL's 52-week high is $345.72. The stock is trading at less than half of its yearly high right now. Even its 6-month high was $311. So while today's move is massive, we are still in deeply discounted territory relative to where this stock was not long ago. The 6-month low was $136, and today we broke well above that base. For support, I am watching the 149 to 150 zone, which is where the 50-day moving average sits. If we pull back to that level, that is your buying opportunity. On the upside, resistance comes in around 170 to 175, which is where I expect some profit taking to emerge from investors who bought the recent lows. My 3-month price target on Oracle is $185, which represents continued recovery toward its longer-term fair value range. Rating is a strong buy with high confidence. Okay, stock number 2 is a very different kind of story and one that requires a lot more caution. Lucid Group, ticker LCID, is up 7.69% today, trading at $9.24. Now on the surface that sounds exciting, but let me give you the full picture because context is everything here. Lucid is an electric vehicle manufacturer that has been in a prolonged and painful downtrend. The 52-week high on this stock is $33.70. It is currently trading at $9.24. That means even after today's 7% bounce, you are still down over 70% from the yearly highs. The 6-month high was $21.92, and the 6-month low was $8.58. So today we are bouncing off the very bottom of that recent 6-month range. Volume today is 10.8 million shares versus an average of 8.26 million. That is a volume ratio of 1.31, so about 30% above average. That is notable but not explosive. It suggests some institutional interest but not a massive accumulation signal. The technical picture here is challenging. LCID is trading below both its 20-day SMA at $9.65 and its 50-day SMA at $9.96. That means the stock is in a downtrend on multiple timeframes. The RSI is 38.7, which is approaching oversold territory below 40. Historically, RSI in the high 30s can signal a bounce is due, but it does not mean the downtrend is reversing. The fact that LCID has no positive PE ratio tells you everything. The company is still burning cash and not generating profits. This is a speculative, high-risk name. The market cap is only $3 billion, which makes it vulnerable to large percentage swings on any news, positive or negative. So what is driving today's move? Likely a combination of short covering, oversold technical bouncing, and potentially some positive news flow around production numbers or partnership rumors. For traders, the key resistance to watch is the 50-day SMA around 996. If LCID can close above $10 with sustained volume, that would be a more meaningful signal. Support sits right at the recent low of $8.58. My 3-month price target is $11.50, representing a modest recovery toward the 50-day moving average zone. But I want to be very clear, this is a speculative buy at best, with low confidence. Position sizing matters enormously here. Do not bet the farm on LCID. If you trade it, keep it small. Stock number 3 is Adobe Incorporated, ticker Adobe, up 6.55% today, trading at $240.11. Adobe is one of those names that long-term investors have been watching very closely because the stock has gone through a significant valuation reset over the past year. Let me give you the numbers. The 52-week high on Adobe is $422.95. Today it is trading at $240. That is a massive discount, nearly 43% below the yearly high. Even the 6-month high was $359. So again, we are talking about a stock that was significantly higher not that long ago and has gone through a painful correction. But here is what is interesting. The PE ratio on Adobe today is 13.98. 13 times earnings for Adobe. Adobe is one of the most dominant software companies in the world with Creative Cloud, Document Cloud, and its expanding AI product suite. A sub-14 PE on a company with Adobe's competitive moat and recurring revenue model is historically cheap. For context, this company regularly traded at 30, 40, even 50 times earnings during growth phases. The volume today is 6.1 million shares versus an average of 5.23 million. Volume ratio of 1.17, so about 17% above average. Modest but consistent, suggesting steady buying rather than a speculative spike. On the technicals, Adobe is trading right at its 200-day simple moving average of $240.11. Sound familiar? Same setup we saw with Oracle. The stock is attempting to reclaim this critical long-term moving average, which is a pivotal moment for trend direction. The 20-day SMA is 241.67, virtually right where we are trading. The 50-day SMA is up at 257, which gives us a clear upside target to watch. The RSI on Adobe is 44.4. That is neutral to slightly bearish territory, confirming this stock has been in a downtrend and today is an early recovery signal rather than a confirmed reversal. We need to see RSI push above 50 and hold it before calling a real trend change. Catalysts for Adobe include the continued rollout of AI-powered features across Creative Cloud, Firefly AI integration, and a potential re-rating as the market recognizes the valuation discount. The 6-month low was 225, so support is well established down there. Resistance on the upside is the 50-day SMA around 257, and then the 275 to 280 range. My 3-month price target on Adobe is $275. I rate this a buy with medium confidence. The valuation is compelling, the business fundamentals are solid, but the chart is still in recovery mode and needs confirmation. Number 4 on today's list is PayPal Holdings, ticker PayPal, up 5.02%, trading at $47.51. And honestly, PayPal might be my favorite setup on this entire list from a pure technical and valuation standpoint. Here is why. PayPal is trading at a PE ratio of 8.78. Less than 9 times earnings for PayPal. This is a company that processes hundreds of billions of dollars in payment volume annually, has Venmo, has a massive merchant network, and is sitting at a PE that you would expect from a declining industrial company, not a global digital payments leader. The market has been deeply skeptical about PayPal's growth story, but at these valuations, a lot of the bad news is already priced in. Now the technical setup today is what really excites me. PayPal at 47.51 is trading above both its 20-day SMA at 45.12 and its 50-day SMA at 44.51. That means the stock has reclaimed both near-term moving averages and is sitting right at the 200-day SMA at 47.51. We are at a critical inflection point right here, right now. The RSI on PayPal is 58.6. That is the highest RSI reading on our list today. 58 is in constructive territory, above the neutral 50 line but not overbought. It suggests building momentum without being in danger of an imminent pullback due to overbought conditions. This is the sweet spot for a potential continuation move. Volume is 15.16 million shares versus an average of 13.4 million. Volume ratio of 1.13, so 13% above average. Consistent and steady buying pressure. Now let's look at the bigger picture. PYPL's 52-week high is 79.50, and the 6-month high was 72.63. Today we are at 47.50. There is massive upside potential if PayPal can demonstrate renewed growth and execute on its product strategy. The 6-month low was 38.96, so we have already bounced meaningfully off those lows. Key support I am watching is the 50-day SMA at 44.50, and below that the $42 zone. On the upside, if PayPal can break and hold above $50, that would be a very significant technical development and could trigger a more aggressive institutional buying wave. Above 50, I would look for a run toward 55 to 58 in the near term. My 3-month price target on PayPal is $58, which would represent a return toward the mid-range of its recent trading band. I rate this a buy with high confidence. The combination of extreme value valuation and improving technicals makes PayPal one of the most interesting setups I have seen in the financial services sector this year. And rounding out today's top 5 is SoFi Technologies, ticker SoFi, up 5.12%. Trading at $17.05. SoFi is a name that has developed a very passionate following in the retail investor community, and today's move adds another chapter to an already volatile story. Let me start with the macro context. SoFi is a fintech company with a full banking charter, offering everything from student loan refinancing to personal loans, investing, and credit cards all in one app. The company has been growing its member base and revenue aggressively, but profitability has been inconsistent, which is reflected in the PE ratio of 43.72. That is elevated, telling you the market is paying a premium for future growth expectations. The 52-week high on SoFi is $32.73. Today we are at $17.05. That is still 48% below the yearly high. The 6-month high was $32.21, and the 6-month low was $15.15. So today's $17.05 price is in the lower half of that 6-month range, but importantly we have broken above the recent 6-month low with conviction. On the technicals, SoFi is trading above its 20-day SMA at 1643, which is a positive sign, but below its 50-day SMA at 1827. That 50-day at 1827 is the critical level to watch. If SoFi can push through that resistance level, you could see an acceleration toward $19 to $20 fairly quickly. Below that level, we are still technically in a downtrend. The RSI is 49.0, essentially dead neutral at the 50 line. This is neither overbought nor oversold. It is a fence-sitter technically, and today's price action is attempting to push that RSI above 50 and into bullish momentum territory. Watch this closely in the coming sessions. Volume today is 50.25 million shares versus an average of 46.34 million. Volume ratio of 1.08, so 8% above average. Honestly, for a 5% move, that volume ratio is relatively modest, which means this move might need higher volume confirmation to sustain. The 200-day simple moving average is sitting at 17.05, which is exactly where the stock is trading right now. Just like Oracle and Adobe today, SoFi is testing its 200-day moving average as we speak. A clean daily close above this level would be a meaningful technical signal for medium-term bulls. Key support is at $15.50 to $16, which encompasses the recent 6-month low on the 20-day SMA zone. Resistance on the upside is the 50-day SMA at $18.27, and then the $20 to $21 range above that. My 3-month price target on SoFi is $21. I rate this a buy with medium confidence, with the primary caveat being that the 50-day SMA needs to be reclaimed before the technical picture fully clears up. And that is a wrap on today's top 5 stocks for April 14, 2026. Let's do a quick recap. Oracle is our highest conviction buy with a target of $185. PayPal is close behind with a high confidence buy to $58. Adobe and SoFi are medium confidence buys with solid upside. And Lucid is speculative only, small position if any. If you got value from today's analysis, please smash that like button right now, it genuinely helps the channel more than you know. Hit subscribe and ring the bell so you get notified every single day when we drop fresh market analysis just like this. Drop your questions and your top stock picks for tomorrow in the comments below, I read every single one. Until next time, stay disciplined, manage your risk, and I will see you in the next video. Take care everybody.